everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session of Oliveboard regarding Master Descriptive Answer Writing for RBI Grade B 2021-2022. It's a 100-day series. First of all, let me welcome all the newcomers for today's session. And let me tell you that this series we have already started 40 days back and 40 sessions are already over. And today is the 40th session. Okay, no, sorry, 39 sessions have been over, and today is the 40th session for today. And first of all, those who are the newcomers, let me tell you that this is the 100 questions for 100-day series. Here we are discussing various aspects related to economic and social issues, financial management, descriptive English, and current affairs. And under each topic, we will be providing you with one question each and every day. Okay, so this series goes from Monday to Friday at 9 p.m. each. Okay, so I request everyone to attend this lecture at a proper time because this series is specially made and designed in such a way that proper all the RBI concepts have been cleared over here, and proper RBI syllabus we can make sure that we are able to complete that. Okay, so because of that only we have created a series that's 100 questions for 100 days. Here we will be discussing static portion, current affair portion for every topics. Okay, so today is a 40th day and today is the finance static portion that we are going to discuss. I think today is the last finance static that we are going to discuss today, and from the next class maybe I think it will be on government schemes. Okay, so today is day number 40th and we will be discussing about international economic institution, that is IMF. Okay, so what is this IMF? IMF is the International Monetary Fund. So it is normally a international financial institution. The headquarter is at Washington DC and it is around having 190 member countries. The main aim of International Monetary Fund is to foster global monetary cooperation. Okay, make sure that proper monetary cooperation is happening throughout the world, and in order to make sure that proper financial stability has been maintained throughout the world, so that world should not go into the financial crisis situation, then properly facilitating the international trade that is happening, promotion of high employment and sustainable economic growth, and also to reduce the poverty. These are some of the working topics which under which International Monetary Fund is working, and sometimes it depends on the World Bank for its resources. That means if IMF has to work, sometimes IMF is depending on the World Bank for its resources, that is money. Okay, then what are the main objective of this IMF? The main objective of IMF is specially foster global economic cooperation, securing financial stability, facilitate international trade, then high employment and sustainable economic growth, and reduce poverty, that we have already discussed. These are the objective, the main objective. These are some of the main objective that IMF has to perform. Okay, then so how this IMF came into being? So here we have a little history regarding how IMF came into being. Okay, so normally it started in 1944, in 27th November 1945 at the Bretton Woods Conference. This idea of creation has been given by the Harry Dexter White and John Maynard Keynes. Okay, so these are the two people who are behind this formation of IMF. So with the 29 member countries and the goal of reconstruction of International Monetary Fund. Okay, so main goal is to properly reconstruct the International Monetary Fund so that no country should go into the crisis if anything happens to that country. Okay, so in order to make sure to help these countries in order to come out of the crisis, so this IMF has been made. Okay, so IMF, as per the Bretton Woods Agreement, to encourage international financial cooperation. Okay, so it introduces a system of convertible currency at a fixed exchange rate earlier, and then it is replaced gold with the US dollar for official reserve. Okay, so after earlier it was working based on the Bretton Woods Agreement, but after the Bretton Woods system, that is called fixed exchange rate system, that got collapsed in 1971. So the IMF has started promoting the floating exchange rate. They are started working on a floating exchange rate. Okay, so after the Bretton Woods collapsed, so IMF started working and promoted the floating exchange rate. Okay, so here what happens is country are free to choose their exchange agreement, whatever exchange agreement they wanted to have, meaning that the market, here the market focuses determine the value of the currencies. Okay, so it is not like that you have been made only dollar you have to keep in, and you have to disregard any other currency. No, here the market forces will determine which currency has a good value, which currency has a less value, or like that. Okay, so they are all relative to each other. So here they are comparing the currencies based on the demands in the market, and relatively the value of currency is decided over there. Okay, then what are the main functions of the IMF? What are the main function of the IMF? So there are especially three main functions. First one is surveillance, checking proper working is going on or not, if anybody is not following the proper international criteria or not. Then the second one is financial assistance. If somebody falls into the crisis, then we have to provide some financial assistance, like India got during the crisis in 1991. Then also providing some of the technical assistance, like if some country is making any policy, so they can take the help of the RBI in making some technical policy, like what we should adopt, what we should not adopt, so that proper function can be made. Okay, so these three main function is to promote the stability of the international monetary and financial system. So now we will be discussing in detail what is this surveillance, financial assistance, and technical assistances. So surveillance. IMF closely monitor each and every member countries regarding their policies and regarding their working in the international financial market. Okay, it is known as the Article 4 in the consultation. Usually this is done one each year, and to assess the economic condition, and also in a view to provide the policy recommendation, like if any thing is going out of control, so they can provide some policy recommendation also what you should follow, so that you can come in the proper criteria, right? Then RBI also IMF also review the global and regional development, how the global development is going on, which part it is going, which part it is not going. Regional development, whether proper region wise development is happening or not, or whether only single places is getting total development. So IMF also checks all these things. They also review all these things. Okay. Then IMF published such assessment on the multilateral surveillance through a World Economic Outlook. So this is a magazine which RBI published, that is World Economic Outlook, and Global Financial Report on the semi-annual basis. So you should know these reports which are published by IMF. Okay. So first of all, during this surveillance, RBI checks each and every country, and then they produce a report, that is World Economic Outlook and Global Financial Stability Report, in a semi-annual basis. Okay, I hope you know all these reports if you are giving any of the examination, right? Then what is this financial assistance? Like if by any chance any country falls in the crisis situation, okay, so it lends to the member countries facing balance of payment problem, BOP problem, like they do not have proper forex reserve in order to pay for their imports. Okay, so based on various criterias, okay, in order to facilitate the adjustment process and restore member countries proper economic growth, various loan instrument have been provided and various facility has been provided by the IMF. Okay, so normally IMF loan are normally provided under a various agreement. Okay, so it requires a borrowing country to undertake a specific policy and measure to resolve the balance of payment. Like whenever IMF provides the loan, it is based on an agreement that we will provide you with a loan, we will provide you with the loan, but for that you have to take some specific policy measures. Okay, to resolve the balance of payment. Like what India has done is that India has adopted LPG reform, liberalization, privatization, and globalization. Okay, so on that basis, India has got the loan from the RBI in order to counter its balance of payment crisis. Okay, so IMF loans are primarily financed by its member countries to the payment of quotas. Like if you are a member of a IMF, like if you are a member of a IMF, then you have to provide certain amount in order to be member of that IMF. Okay, so that amount that you are paying to IMF, so around 190 countries provided a certain quota of the money to have a membership over there. So these 190 countries will provide some of the money to the IMF. So this is the official reserve of the IMF, which IMF is having, okay, based on the quota system. Based on the quota system that we are going to discuss in the few more slides that are coming, okay. So but if sometimes IMF is not having that much of money, so if necessary IMF may borrow from a number of its financial strongest member countries. Like if there is an issue like IMF is not having that much of money at that time, but so IMF can go to various countries. Like right now some of the economically strong countries can be China, Japan, USA, all these countries. So they can take the loan from there through a new agreement to borrow, NAB, or general agreement to borrow, GAB, to supplement the resource for its quotas. Okay. Then we have a technical assistance. So what is this technical assistance that is provided by the RBI is IMF provides technical assistance to help member countries to strengthen their capacity to design and implement effective policies, normally in 4 areas. So here IMF is helping the various countries to strengthen their capacity in the 4 fields, like monetary and financial policies, then fiscal policies and management, statistics, and economic and financial legislation. So all these places IMF is providing help of their member countries. Okay, no, normally IMF offer training courses and seminars to the member countries at various places. Normally it is provided at a headquarter, like IMF headquarter is at Washington DC. They have a various other regional training institute that is in Austria, Brazil, China, India, Singapore, Tunisia, UAE. All these places are there where they are providing various training courses to the member countries. Okay, IMF keep on conducting these trainings throughout the world. Okay, now what is the governance? What is the structure of this IMF? What is the normal structure of this IMF? IMF works on the board of governors. Okay, so it works on the board of governors. That is, it consists of one governor and one alternate governor for each member countries. Okay, that means each country is providing one governor and one alternate governor for each member countries. Okay, so that means each member country has to appoint its 2 governors. Okay, if that one governor is not there, primary one, then secondary one governor can be sitting over there. Okay, so eh, the main role of this board of governor is responsible for electing or appointing executive director to the executive board. That means total governors will decide the electing or appointing the executive director to the executive boards. Okay, so what is the main role of this is, first of all, the main role of this board of governor is to electing and appointing executive directors. Then whether to approve the quota increase, special drawing right that we call as SDRs, allocation. Then they will also decide admittance of the new members, compulsory withdrawal of the members. Okay, so these are all done under the board of governor. So what is the board of governor major work is to do all these 3 things. Okay, appointing, approving, and admittance of the new members. Okay, so amendment to the article of the agreement and bylaws. Then board of governor is advised by the 2 ministerial committees. So whatever the board of governors, okay, the board of governor, like 180, like if you say 190 members are there, 190 members are there, so every country is appointing 2 governors, so you can say double the amount of into 2. Okay, so normally the board of governor, this board of governor, which may be a large group of people, they are mainly advised by the 2 ministerial committees. So whatever the decision has to be taken by this board of governor, it is advised by the 2 ministerial committee. One is the International Monetary and Financial Committee, that is called IMFC. Okay, and there is one development committee. So this board of governor is advised by 2 committees, that is IMFC, and one is the development committee. Okay, under board of governors. Okay, board of governors of the IMF and the World Bank group normally meets one in a year. So whatever the board of governors of the IMF and those are the World Bank group, they normally meets for one a year. Okay, so during this IMF World Bank annual meeting, they normally discuss about the work of their respective institution. Okay, because they both have been made during the Bretton Woods summit. So they discuss both together what are their work and what progress they have taken under their respective institutions. Right. Then what is this ministerial committee? Ministerial committee is that board of governors is advised by the two ministerial committees. So what is this ministerial committee? So the board of governor is advised by two ministerial committee. First is IMFC that we have now we are going to discuss is that. Okay. So normally IMFC has 24 members. Okay. That has been drawn from the pool of 189 governors. As you all know that the membership of the IMF is around 190. So IMFFC has 24 members, okay, and represent all member countries. Normally, what they discuss is they discuss the management of the international monetary and financial system, and they also discuss proposal by the executive board to amend any of the article of the agreement. So a specific work has been already defined under the IMF. Okay, so the main work of IMFC is to proper discuss the management of the international monetary and financial system, and to also discuss the proposal by the executive board. So whatever the proposal that has been given by the executive board, they discuss on that proposal to amend the article of agreement. Okay, so and the third one is any other matter of the common concern affecting the global economy. So this is the work. 3 points work is that of IMFC. Okay, then we have a development committee. Okay, what is this work of this development committee? It is a joint committee. It is a joint committee of 25 members from the board of governor of IMF and World Bank. So here World Bank and IMF both are working together. Okay, so the main task with advising the board of governor of the IMF and the World Bank on issues, here they are going to discuss the issues related to economic development in the emerging market and the developing countries. Okay, normally the World Bank deals with the poverty and all these things, so that is why here this development committee has been set up so that IMF and World Bank can discuss together in order to make sure that proper economic development of the emerging market and developing countries can take place. Okay, so it serves as a forum for building the intergovernmental consensus. So building intergovernmental consensus on critical development issues. So under board of governors, under the board of governors, two committees are there. So a specific work has been provided to these committees. Right now, what is this executive board? What is this executive board is all about? So there are 24 members in this executive board that is elected by 189 people that we have already discussed previously of the board of governors. Okay, 25 members in the executive board has been assigned. Okay, so normally their work is to conduct the daily business of the IMF. They normally exercise the power delegated by the board of governors and the powers under articles of agreement. So it normally conducts day-to-day functioning of the IMF. Okay, they check on the IMF work, what is the coming everyday day-to-day work. Okay, they discuss all aspects of the fund work, whatever fund to whom we have to give, what have to give. Okay, from IMF staff to annual health check and member countries economics to the policy issues and all these things they are going to discuss. Okay, so the board normally makes decision based on the consensus. But if sometimes the consensus is not there, so they have to go for a formal process of voting. Okay, so the voting has a different criteria in the International Monetary Fund. Okay, normally the works goes on consensus, but if some consensus we are not able to develop, then voting has to take place. Okay, so votes are different, how the votes will be done over here. They have a different kind of voting system. Okay, so votes of each members equal to the sum of its basic value. So whatever the votes are there, first of all, there is a basic value of these votes. Okay, that is distributed among all the members, and a quota based vote. So here the vote has been classified under two bases. First of all is the basic vote, which is equally distributed among all the members, and then after that there is a quota based votes. That means whosoever has a highest quota in the IMF will have a high voting value. Okay, so a member quota determines his voting power. Right now, USA has a highest quota in the IMF, so the value of the USA vote will be more. Okay, like India have a less quota in the voting system, so India's value will be less in the quota based vote, right? So, so what is this member quota in the IMF? Oh, what is this all about? Members quota. Okay, so, quota represent the subscription by a member country to the capital fund of a IMF. So, as I told you in the starting that each member some subscription like it's like a subscription fees that you are giving to the IMF. Okay, so based on the type how much subscription you have taken of the IMF, based on that you are getting some quotas. Okay, so quota are fixed for each country, taking into account such factor as a country national income. So what they take, what they normally consider during the quota that has been provided to any country. First of all, they check the country's national income, reserve, export variability, ratio of export of the national income. Okay, so apart from representing the subscription of the country to the IMF, the quota also forms a basis of determining SDRs, drawing rights. Okay, quota is also helping in finding out what will be the SDR that has to be given to that country, special drawing rights. Okay, more the quota, more the special drawing rights. Less quota, less special drawing rights, right? So 25% of the country's quota is to be contributed in the form of SDRs. That means 25% you of the quota amount you will get in the form of SDR. Okay, then 75% in the country's own currency. Okay, so this is what. So the quota are received by the IMF at a period of not more than 5 years. Okay, this is. Then members quota in the IMF. How this is done? So each country's voting power is a sum of its basic vote, which we have equally given to the everyone. Okay, each member country, and its quota based vote. So what is this voting power? Voting power will be equal to your basic vote plus your quota base vote, whatever the quota that you are having in the IMF. Okay, so each IMF member has 250 basic votes. 250 basic votes plus one additional vote for each SDR 1 lakh of quota. Like for each SDR of 1 lakh, one additional vote is provided. Okay, plus one additional vote for each SDR 1 lakh of quota. Okay, so more SDRs you are having, that means your voting power is also becoming more and more. Less quota you are having, your voting power is become lesser and lesser. Okay, so each member's quota is the most fundamental element in its financial relationship with the IMF. So quota is the most important fundamental element, because basic votes are given properly to everybody. Okay, but the SDRs, special drawing rights, have been given based on the quota system. Okay, so it determines the amount of financing it can receive from the IMF and its share in the SDR. So quota will decide how much financing you can get from the IMF during the financial crisis, and its share in the SDR allocation. Based on the quota, you will be getting SDR allocations. Okay, then pay a quota subscription. So how this is done? Okay, pay a quota subscription. So on joining the IMF, when you join a IMF, each member country contributes a certain sum of money. So if I am joining IMF, so I have to provide certain sum of money. Okay, if somebody else is joining, they have to provide some money. Okay, so each member country contributes a certain sum of money, that is called quota subscription. That means if I am giving 100 rupees and other person is giving 50 rupees, so I have a more quota. This person will be having less quota. Okay, so this is like that, which is based on some country's wealth and economic performance. That is the quota formula. So normally how this weightage is calculated, it is weightage average of the GDP. 50% of the GDP weightage has been taken under this quota. How open your economy is 30%. Quota has been taken over here. Economic viability, variability, then international reserve 5%. So GDP of a member country is measured through the blend of the GDP based on the market exchange rate. Okay, market exchange rate weight 60%, and on PPP exchange rate, that is 40%. So based on that, you have a quota, that means how much quota you are going to get, and based on that, certain percentage is given. So for this much percentage, how open your market is, that percentage of, then total everything is added, and you are provided with a quota subscription, right? Then how this voting power is there? What is this voting power is all about? So voting power in the IMF is based on the quota system that we have already heard. Okay, so each member has a number of basic votes. That means each member number of basic vote is equal to 5.502% of the total votes, plus one additional vote for each SDR of 1 lakh. That means if you have a 1 lakh SDRs, that means one extra vote you are having. If you are having 2 lakh SDR, then you are getting two more votes. Okay, it is like that. Okay, so the special drawing right is the unit of account of IMF. So SDR is a kind of a unit of account, which this is a kind of unit which IMF has taken to represent a claim of currency. So how this SDR value is calculated? How SDR value is calculated? The SDR value is calculated based on the basket of international currency. Maybe it is like pound, yen, dollar, all these things like a basket of currency. I think there is around six currencies that are in the basket right now. Okay, so the basics votes generate a slight bias in favor of the small countries. Okay, but additional votes determined by the SDR outweigh its bias. Okay, so normally earlier the basic votes was providing slight bias to the smaller countries because everybody is having the same vote. But this SDR, how much the country SDR is having, that outweighs this bias. That means more the country's SDR, like right now USA is having more SDRs, so US has the more voting power than any other country in the world right now. Okay, because USA contribution in the IMF is very high, so that is why USA has a huge quota over there. That is why people say that if you wanted to change in the IMF, it cannot be done until and unless US wants. Okay, like that. Okay, so what is this special drawing rights under this international monetary funds? What is this special drawing rights? So SDR is an international reserve asset that has been created in 1969. Main aim is to supplement its member countries' official reserve. So whenever you are asking about the forex reserve, how much forex reserve you are having, so you talk about your forex foreign currency plus gold plus how much SDR you are having. So this counts of your forex reserve. Okay, so main aim is to supplement its country official reserve. So normally SDR is neither a currency nor a claim on the IMF. Okay, so it is not like a currency system. Okay, SDR is not a currency. It is just a weighted average of a currency, so what you can utilize during a problems. Okay, so SDR is based on the basket of five currencies: US dollar, euro, Chinese renminbi, Japanese yen, and British pound and sterling. So how this exchange can be done? SDR can be exchanged for these currencies. The SDR serve as a unit of account of IMF and some other international organization. So this SDR basket, like these five currencies, are reviewed every 5 years, but sometimes it can be done earlier also. So we check whether the proper weightage is given to the each and every currency or not. Like if US dollar is going down and Chinese renminbi is going up, so we have to change the weightage. That means we have to provide more weightage to the Chinese renminbi and less weightage to the US dollar. So based on that, every 5 year it is checked, this basket is checked. So, and that basket reflects the relative importance of the currency. Which country is which currency is more important, the more weightage is given to that currency in the world trading and financial system. Okay, so quota, that is the amount you have contributed to the IMF of a country, is denominated in the SDRs. Member voting power is directly related to their quota system. Okay, member powers is directly related to their quota system, right? Then what is this reserve position with the IMF? So there is a one concept of the reserve position with the IMF. What is that? A reserve tranche position implies a portion of a required quota. That means whatever your required quota is there. Okay. So a portion of that currency of each member country must provide to the International Monetary Fund that can be utilized for its own purpose. Okay, that means a river tranche position implies a portion of the required quota. That means whatever required quota you have to provide, there certain portion of currencies each member country must provide to the IMF that can be utilized for its own purpose. Okay, so mainly the main work of this river tranches is that it is utilized during the emergency account that IMF member can access anytime. Okay, it is happening during the emergency time when you wanted to access it anytime. There you don't have to agree with any of the IMF uh, agreements, like if IMF saying you have to follow this, you have to follow that. Okay, no, under this reverse position you don't have to agree with IMF. You can immediately take out that money and utilize it to pay or condition or without any paying any kind of service fees. Okay, so under this required quota, certain portion is kept aside which you can utilize as an emergency fund without agreeing to the condition or paying any kind of service fee. Okay, so what is that emergency fund is all about? So this emergency fund, that IMF also offer emergency fund to collapsed economy. Okay, this is the quota that you always get. Okay, but IMF also provided emergency fund to the collapsed economy. So how, there is an example that has been given, that it did for Korea in 1997 during the financial crisis that happened in Asia. Okay, so what happens was that the fund is injected into the Korean's economy, foreign reserves, in order to make sure that to boost the local currency, in order to make sure that the local currency does not loses its value. So for the fund was injected into the Korea's foreign reserve in order to boost the local currency. Okay, so that to avoid any kind of devaluation of that currency. So in order to increase the value of the local currencies, this fund has been injected. Okay, so emergency fund can also be loaned to the countries that have faced economic crisis as a result of the national disaster. So if any national disaster is happening, so this emergency fund can also be used, because under this natural disaster, it is not of the country's responsibility. Okay, natural disaster can happen to any of the country. Okay, so under that also emergency fund can be loaned to the country that have faced economic crisis as a result of natural disaster. Then what is this IMF and India's relation? Okay, India joined the IMF on December 27, 1945, and it is one of the IMF original member, that is the founding member. Okay, so mainly for technical, financial, technical assistance. So for all these things we have already provided. Please refer to the current affairs material of the courses. So I have also told that we are running our RBI courses, RBI courses. So you have to join these courses so that you are able to understand these topics in a proper way. We have already discussed earlier. Okay, so you please refer to this material of the courses. Okay, then now we come into the similarities between the IMF and the World Bank. So we all know that IMF and World Bank has came during the Bretton Woods summit, right? They have both have been created at a same time. They both have been created at a same time. So what are the similarities? Some people ask, what is the similarity between IMF and World Bank? What is that? Normally they do the same work. No, actually they do not do the same work. They just supplement each other, like they help each other. Okay, so both the International Monetary Funds and the World Bank were formed together at the Bretton Woods Summit in New Hampshire in July 1944. That is why they are called as Bretton Woods twins. So sometimes it can ask you what are the Bretton Woods twins. So you can tell them IMF and the World Bank are the Bretton Woods twins. Okay. So both were created. Both were created to support the world economy. Here we are discussing the similarities. Right now we are discussing about the similarities between the IMF and World Bank. Okay, so both were created to support the world economy in their own unique way. Okay, so both are headquartered at Washington DC. They both have the same membership as no admission to the World Bank is possible until and unless you are member of IMF. That means if you are a IMF, then you have a membership of the World Bank. Okay, you can go and take the membership of the World Bank. It is not like that you take the membership of one institution and you cannot take of the other. No, you have to take the membership of both, right? So the management structure of the World Bank is largely similar to the IMF. So whatever the management structure that we have discussed earlier, it is similar that of the IMF. Okay. So voting rights. Normally, what are the voting rights in these institutions depends primarily on the capital contribution. So as I told you, voting rights differ. Voting rights in these institutions are totally dependent on which country is contributing more to these IMF or the World Bank. Like if USA is contributing more, so the voting power of the USA will be more. If China is providing much of the money to the IMF and the World Bank, so Chinese voting power will be more. Okay, it is like that. Then what is the difference between IMF and World Bank? What is the difference between IMF and World Bank? Okay. So World Bank is a developmental institution, but IMF is a cooperative institution. Mainly the projects taken by the World Bank are all related to the development activities, but IMF seeks the cooperative institution where the main work of this IMF is to maintain the balance of payment situation between the various nations. Okay, so system of payment and the receipt between the nations. Okay, IMF exists to preserve the proper monetary system throughout the world, whereas the World Bank performs economic development role. Okay, both have different purposes. IMF supervise the economic policy of its members, and it expects them to allow the free exchange of the national currencies to make sure that proper financial order is maintained. Okay, and also IMF also acts as a provider of the emergency loan that we have discussed earlier. Okay, to the member countries who are already in difficulties, that we have taken that loan from the IMF, but we have to follow some conditions of the IMF during that time. Okay, in exchange for the promise from the member nation to reform our economic policies that India has done during 1991 crisis, as LPG reforms that India has taken. Okay, then what are some more differences are there? So the World Bank finances economic development among the poor nations. So World Bank normally works for the poorer nation and do the development activities. So most of the World Bank projects are running in the African countries and Asian countries. Okay, mainly African and Asian countries. Most of the work are done in the African and Asian countries, and they have a specific and targeted projects. Like whatever the problem is there, they are focusing only on that water problem, or we are making a water project, air pollution and anything, or schools and all those things, health issues are there. So they are specific and targeted projects. Okay, so under the World Bank, two organizations. One is IBRD, that is called International Bank for Reconstruction of Development, and the second organization is International Development Association. Normally, IBRD lends to the developing nation at a preferential interest rate, and IDA only lends to the poorest nation. So this IDA is for the poorest nation on interest-free basis. That means IBRD normally loans to the country like India on a preferential interest rate. That means the interest rate will be low, but still interest rate will be there. But IDA, that is International Development Association, here they are only lending to the poorest countries, poorest nations. That is mainly on the interest-free basis. So there will be no interest on the money that has been given. Okay, so they may have a different funding sources. So both IMF and the World Bank have the different funding sources. IMF usually gets the money from the membership quota. Okay, normally IMF raises this money through the membership fees, that is called quotas, and each member country has to pay a quota based on the relative economic size. So larger economies pays more in the IMF. Okay, but the World Bank raises money through borrowing by issuing the bonds to the investors, and that means it's like a World Bank is normally working like a bank. Okay, so they are getting money, they are paying interest also. Okay, they are releasing bonds, and they are giving bonds to the investors and all those things. And it may receive, and it also receive grants from the donor. That means various donors are there, like various rich peoples, rich institution are there, so they are getting some grants also from the donors. Okay, so at the last, the main difference is that the IMF primarily is to stabilize the world exchange rate system in order to maintain the proper economic viability of the whole world economy. Okay, and the World Bank is primary goal is to reduce the poverty throughout the world. Okay, so these are the main differences between IMF and the World Bank. So we have reached to our last. Now we have questions for all of you today, guys, and the question is: discuss the role played by IMF during the pandemic and how the asymmetric power distribution, that means distribution of fund according to the quota in IMF, has impacted India's interest. So very interesting question. First of all, discuss the role played by the IMF during the pandemic. As you all know that IMF has released a huge sum of money for various nations. Okay. And we have also now here they are asking the second part is that what is the how the distribution of fund according to the quota system has affected or impacted India's interest. Okay, this is the question for today. So this is the 40th question that you are going to do. Okay, guys. So if you have already done three questions from the last 40 days, so please go and avail your 35% off coupon. Okay, so if you have any query, so you can just write to rg.gulati@oliveboard.in and just write a subject over that here, coupon code 35% off. And if you have attempted three questions and if you have not received the coupon code, just write to her, and please utilize the same email ID for writing answer. Like if you are writing answer from one email ID, so utilize the same email ID for writing all the three questions, and you will be getting automatically coupon code. But if you are not getting, just email to riti.gulati@oliveboard.in. She will provide you with the coupon. Okay. So this is the way how you can write the answer over there. First, go to the Oliveboard Discuss Forum. Check the descriptive tab, RBI Grade B tab. So there will be attempt 3 RBI descriptive questions from the same email ID. Utilize the same email ID, and your answer should be well written. Once your three answers are over and it is evaluated, and you will be getting 35% off on all RBI plans. All RBI plans. Okay, you will be getting. So at the last, we have a huge community on YouTube, Instagram, and Facebook. Do gather, like, subscribe, and thank you for your support. And at the last, never forget to like, subscribe, and follow. Happy learning, guys. Thank you so much, guys. See you. Take care tomorrow. Bye bye.